Hi everyone, welcome to ETF for Life. Today we're looking at another ETF that has outperformed the S&P 500 by about 7% per year over the past decade, with an annualized return close to 20%. It's also focused on tech stocks, but with a very different approach. This is the iShares Global Tech ETF, ticker IXN. In this video, we'll break down its investment logic, review the long-term performance and risks, and see if it could be a solid option for your portfolio. IXN was launched back on November 12, 2001, so it's one of the more established tech ETFs. It's managed by BlackRock under the iShares brand. The expense ratio is 0.39%, a bit higher than Vanguard's products. Assets under management are around $5.7 billion. Any ETF over $5 billion is considered large, meaning strong market recognition, good liquidity, and very little risk of being shut down. So how has IXN done versus the S&P 500? If you had invested $10,000 in 2002 and held it to today, you'd now have more than $120,000. That's a 12-fold return. By comparison, the same investment in the S&P 500 would only be worth about $85,000. Big difference. On an annualized basis, IXN delivered 11.2% per year versus 9.52% for the S&P. In its best year, IXN gained 53%, far ahead of the S&P's best year at 32%. But tech stocks always come with higher risk. Out of 283 months since 2002, IXN was positive in 169 months, compared to 185 for the S&P. During the financial crisis, IXN had its worst year ever, down 43%. It also suffered its biggest drawdown, losing more than half its value, and it took 37 months to recover. So in terms of downside, IXN has been about as painful as the S&P. What if you bought at random and just held? Over any 3-year holding period, the worst loss was around 15%. Over 5 years, the worst was about 8%. So even with long-term holding, you can't assume guaranteed profits. Valuation still matters. So what makes IXN different? IXN tracks the S&P Global 1200 Information Technology Index, which is basically the tech sector of the S&P Global 1200. That index covers 30 countries and about 70% of global market cap. In other words, IXN invests in tech companies worldwide, not just the US. It's weighted by free float market cap, so bigger companies like NVIDIA get higher weights. But there are caps. No single stock can be more than 22.5%, and the combined weight of all stocks above 4.5% can't exceed 45%. That prevents the fund from being dominated by just a few mega caps. Looking at the holdings, NVIDIA takes up over 20%. Microsoft is around 18%, Apple about 8.8%. Then Broadcom drops below 5%. And unlike US-only tech ETFs, IXN includes global giants like TSMC in Taiwan, SAP in Germany, and ASML in the Netherlands. That means it doesn't miss out on non-US opportunities while also diversifying regional risk. To sum it up, IXN is a global tech ETF. Yes, the expense ratio is a little higher, but that hasn't stopped it from outperforming the S&P 500 over the long run. The risks are real. Drawdowns can be brutal, but the recovery pace has been similar to the S&P. Right now, the US is still leading global innovation. But do you think other markets might catch up? Drop your thoughts in the comments. And don't forget to like and subscribe. Let's keep searching for those buy once, hold forever investments together.